What's going on, investors? EBS Invest here, back with a brand new video. Today we're going to be discussing a stock that outperformed the stock market in 2022 by a considerable margin and is a dominant force in the pharmaceutical industry, especially as of recent. This stock is Merck. This may be in some of your guys' portfolio, and I'm looking at this company. Unfortunately, I'm looking at it after the run-up, but I still think it's a good time to evaluate it. Going over here, you can see that Merck outperformed the stock market by roughly 44% gain in 2022. On the 6-month time frame, the stock is up roughly 22%, and on the 5-day time frame, it is up 1.8%. Overall, net sales for this company are up 14% year over year. Their gross margin is 74%, which is outstanding. Some of their key builders for the company were their COVID treatments. That was up 10%. Their Keytruda cancer treatment was up 26%, and as well as just good news that a lot of their open drugs are in stage 3 of development. Now this stock, a lot of people seem to like it. It does offer a 2.6% dividend, and it also has pretty solid earnings per share, and it does have a below 20 PE ratio. So although some may think this company is overvalued, it still seems that it has, although higher PE ratio, not abnormally high, a $288 billion market cap. And going over to the financials, we can see that they have grown the revenue pretty well, although slower than some. They are growing the revenue. You can see that they have increased their profit as well. You can see earnings per share is also increasing as well in that sector. Going over to their balance sheet, you can see they have a lot of assets, not a lot of liabilities, so that cancels out, which is good to hear. They do have some debt. They do have a lot of net debt, unfortunately. Going over to the cash flow, you can see that I think they would be able to pay down the debt if they needed to. They have a lot of free cash flow on hand, and they have pretty good operating cash flow, and you can see that they're both increasing in both of those sectors as well.
We interrupt our program to bring you this important message.
So going over on Charles Schwab, you can see they give it a B, and a lot of the other, besides Morningstar, they give it an outperform. So it's a pretty interesting company. It seems to be that their cancer product is a really high quality and seems to be doing really well for them. Going into the CFRA report, you see they give it a strong buy and has a price target of $116. Yahoo Finance has a price target of $115. We'll see what we get for our price target. But overall, you can see up 14% year over year, led by Keytruda, their HPV treatment. Overall, they have a lot of revenue. It's pretty crazy, $58 billion revenue. But it's pretty cool that they have such large gross profit margin. Generally, Warren Buffett says you should look for 40% and above, and 74% is pretty remarkable in my eyes. Like I said before, if you want this report, I can send it to you. I'm not going to show you the whole thing, but I do read them before I do my stock analysis. Going over to our EBS Invest Intrinsic Value Calculator, going over here onto the analysis page, it does say a 1% growth and a next year of 11%. When I did check the stock report, it did say 11% growth. So we will try out 11, and then I think we'll be a little bit conservative in our next assumption. But you can say, it does say an intrinsic value of 180, which I have a feeling is a little high considering everyone else says it's lower. So I generally like to do 5% less than what everyone thinks. So that would be 6% growth. And with 6% growth, we get an intrinsic value of $120, which is pretty close to what everyone else is expecting, around that $115, $116 mark. So an acceptable buy price is about 107. Excuse me for that. It is currently trading at 113. So I do think this stock is at fair value, and seems to be trading around that fair value as well as its price target. So maybe companies will update their overall price targets for this company. I do find it's pretty interesting that a lot of their healthcare has been performing extremely well. And if we just compare this thing to the S&P 500, which I think would be pretty fun to do, pull up the SPY here. We'll make the SPY red. It's a little bit easier to see. So you can go on to the 1 year time frame. You can see in the blue line, Merck just absolutely blew the S&P 500 out of the water. So will it be able to continue that in 2023? Potentially. I do think it's at fair value. I do agree with a lot of these assumptions that it's probably priced in right now. Would it be a good purchase? Potentially. I'd put a buy hold on this as well, just like my United Healthcare video. I personally just think might just need to come a little bit lower, but is this a good time to catch the stock before it takes off again? I'm not sure, but I do think in the long run, this stock is a buy in the long run due to it has a very strong portfolio, as well as overall it seems to be that it's performing well with its current assets. If you guys enjoyed this video, please subscribe and leave a like or a comment down below. It really helps with the algorithm. Our goal is 100 subscribers by the end of 2023, so please help me reach that goal. This has been EBS Invest. Thanks. Peace.